Welcome to our new 5-part series on how you are probably losing money if you are not doing regular bookkeeping and reporting within your business. When starting up as a small business, that elusive VAT threshold may seem a million miles away, and so you don't give it a second thought. In case you don't know, you must be registered for VAT once your rolling 12-month turnover surpasses £85,000. That's not the 12 months of your financial year, but just the previous 12 months that have happened. You can register voluntarily before this point, but once you cross that £85,000 threshold, it does become mandatory. So for the majority of businesses, the VAT rate is 20%, which means that 20% of each sale is owed to you know who. So it's fairly obvious that you cannot accurately know your turnover unless your books are up to date. But there's no pleading ignorance with HMRC. If you don't realise that you've gone over that threshold until 6 months later, it's kind of tough luck. You'll still be required to pay the VAT from the time since you crossed the threshold. So knowing a good way in advance that you're going to get there gives you time to increase your pricing and therefore ensure that your profit levels aren't affected. On the plus side of being VAT registered, you can claim your VAT back on business-related purchases, but only if you get a receipt showing the amount of VAT and the VAT credentials of the supplier. If these receipts are crumpled up in a pocket, in the bottom of the bag, you don't take them, or they're just downright lost, then you will be missing out on claiming back valuable cash into your business. Having an app such as Dext on your phone where you can immediately take a picture of the receipt and then recycle it means you're not going to be missing out on anything. On the other hand, if you're already VAT registered and for some reason your turnover starts to regularly fall below the threshold, you are allowed to deregister for VAT. Knowing when this has happened and dealing with it quickly will save you from handing over your hard-earned cash to HMRC. As if losing out on VAT or having to pay more of it isn't enough to convince you to keep your records up to date, go back and see Part 1, the Tax Edition, or move on to Part 3, the Business Structure Edition. The very best way to keep up to date and accurate is to use accounting software. Sorry, spreadsheets, you just don't cut it anymore. And to get clued up on how to understand that data and what it's telling you. If you would like to get some training on how to do accurate bookkeeping and reporting for yourself, or you'd like to outsource this to experts, fill in our quick questionnaire and we will be more than happy to help.